So today we are talking about perpetual futures. So welcome to the webinar of how exchange operators can drive growth with derivatives trading. I am Lauren Nichols, your moderator today, head of sales here at AlphaPoint. I've been in the crypto space for 5 years and spent 15 years before that in traditional finance, working in bank and card payments. My background has given me a unique perspective on how financial infrastructure evolves, and I can tell you that what we're seeing with perpetual futures in crypto is truly transformative. I'll hand it over to Matt and Andrea to introduce themselves before we dive in. Andrea, would you like to start us off?
Yeah. Hi, I'm Andrea. So I'm the principal product manager at Bybit. Before that, I was actually a quant trader, and now I was transitioned into the trading related product managers.
Cool. Hello, my name is Matt Moss. I'm Director of Product at AlphaPoint. I've been with the company almost 4 years now. And before AlphaPoint, I spent more than 20 years in traditional finance as a developer, engineering lead, business analyst, and product manager with a focus on equities trading and post-trade services. And I've been intimately involved in AlphaPoint's recent focus on leverage trading. That includes our spot margin trading offering, which was launched this past February, and now our perpetual futures offering. Really excited to be here.
Thank you both. Before we jump in, I just want to remind everyone here, please feel free to post any questions and we will cover at the end during the Q&A. So we know that perpetual futures have been around since 2016, but in your words, what exactly are perps or perpetual futures, and why have they become so critical to modern crypto trading?
You want to take that one, Andrea, or do you want me to?
Yeah, I'll really take this one. So not sure how you guys understand the perpetual contract. So it's a really unique innovation out of crypto. It was first introduced by DMX. It was one of like OG exchange in crypto. And you can think of the perpetual contracts as the futures contract, but without an expiry date. So that was a really like brilliant design. So because without expiry, the contract price stays a lot closer to the spot prices. And trader also no need to go through the hassles with the rollover thing. And Bingmax also introduced something really smart. That is the funding rate mechanism. So that makes sure the price stays really close to the spot price. And so you can think of the perps as like a leverage continuous spotlight trading instrument. So I would say that the importance are two main aspects. The first is that they brought unprecedented efficiencies to trading, whether it's like capital efficiency or time efficiency. And the second is that because of all the new mechanism and new trading rules, they create more diverse trading opportunities and strategies that simply just didn't exist before.
Yeah. And I would add, certainly they're critical because of also the high leverage that can be involved. So they can allow traders to control a very large position with a small amount of capital, which amplifies the gains, but also the losses. So it really provides a very convenient way to do important things in the crypto world. And obviously, they're unbelievably popular right now, certainly exceeding the spot markets.
That's a great foundation. Thanks, both of you. Now I'm curious, how can exchange operators differentiate by offering perpetual futures?
I guess I can take this to start. So I'd say that really, by using AlphaPoint's perpetual futures solution, exchanges can diversify their product offerings by reselling the already established perpetual markets run by a major exchange like Bybit. So that's really the fundamental thing. It's a low cost, low risk way to increase revenue. The heavy lifting is done by Bybit and AlphaPoint. We are providing a turnkey integration that's easy to set up, super reliable. And, of course, we had to decide who we should work with, and Bybit was an obvious choice, being the global leader in perpetual futures. So that's really my concise answer to that.
Andrew, did you want to add anything?
Yeah, I think like I'm pretty confident that Bybit has really good like coin selection process, that we make sure that we're listing the right coins. And also we have really good trading infrastructure and mechanisms. So, and also for sure the good liquidity. So I'm sure this integration is like really good, beneficial for both sides.
Yeah.
Thank you both for the context. I think that sets for a great foundation for our discussion today. So we've established what perpetuals are. Now I'm curious about the journey. How do we go from perpetuals being this niche product to absolutely dominating the crypto derivatives market? Andrea, you've been at the center of this explosion at Bybit. What has driven the meteoric growth of perpetual futures in crypto?
Well, first of all, like perpetual themselves are really like new innovation of the and unique to crypto, right? So with no, as mentioned before, with no expiry date, they that traders to hold positions continuously and with a very high capital efficiency. Second of all, they have opened up for more trading opportunities and strategies. So given that the market, the participants flexibility that traditional products never offered before. And the last is that because they can attract a diverse mix of traders, from seasoned traders in traditional finance to newer generation, like we can see the newer upcoming generations of crypto native traders, like full of passion and creativity. So this diversity has really made the market highly active and liquid.
Yeah. I would also
And Matt, oh,
go
go
ahead.
ahead.
Yeah. No, go ahead, Lauren.
I was going to ask you a second question, but feel free to add on to
Well,
Andrea.
yeah, I mean, there's a couple other points I'd make, or that just in general, perpetuals are really a perfect product market fit for crypto, because crypto markets operate 24/7. They're really volatile, and perpetual futures allow traders to react instantly. They can speculate on price movements and importantly, up and down at any time without the constraints of traditional market hours. And so that's really important. And being able to go short, it's a very easy way to go short, to bet that that on the decline in an asset's price, and then the leverage, just the ability, which Andrea already mentioned this, but the ability to control a large position with a relatively small amount of capital. It's just a really good fit.
You beat me to my question,
Okay.
so we're on the same page.
Okay, good.
So let's talk numbers. We hear perpetuals now dominate trading volume, or crypto trading volume specifically. Andrea, from your vantage point at Bybit, why are they seen as the must-have product for leading exchanges?
Um, Yeah, because it kind of like it's a standard for the exchange now, right? Because everyone, for one, it's like everyone's having it. So if you don't have it, you're losing like that kind of competitive edge. And also because of the user demand, right? Because traders now want the continuous exposure with leverage and this kind of capital efficiency. The old like futures with expiry thing is not attracting to them anymore. And also because the liquidity concentration, because most participants trade perpetuals now, so the debt and then the liquidity naturally concentrate here. So kind of like reinforcing their dominance. Yeah.
And I guess I would also add, specific to AlphaPoint, our own exchange customers, the operators who are running AlphaPoint exchanges, because perpetuals are so popular, if you stick only to spot, you're just missing out on a huge segment of the market.
Mm.
And so adding them, especially with an easy bolt-on like our perpetual futures offering, it's a really low cost, easy way to diversify and to increase the trading volume. And by increasing the trading volume, with leverage, there's a lot more opportunity for fees to be generated. And also in terms of just attracting and retaining active traders. So the active traders are obviously going to be the most valuable customers for an exchange, and they need sophisticated tools. And they want to hedge, they want to use leverage, they want to be able to speculate on price movements, especially being able to do short trading. And so if you don't offer perpetuals, high volume traders are likely to go to a venue that will offer it. So I think it's a critical piece of the puzzle.
Yeah, I hear you. And I think it's a great transition to this next section of benefits for the exchange operators and that sort of what does it mean for their bottom line. So maybe let's dive into the real business benefits that are driving this adoption. Matt, let's start with the basics. How exactly do perpetual futures boost trading volumes for
Yeah.
either AlphaPoint's clients or in general?
Sure, sure. Well, first you have the ability to trade with leverage. It's the single most powerful multiplier, right? So at 50 times leverage, a trader with $1,000 of capital can, create a position of $50,000. And trading fees, of course, are charged on the position size, not the margin. And so the revenue on that trade is actually multiplied by 50 times. And so that just dramatically increases the possibilities there. And also, as Andrea has mentioned, I think a couple times, it's all about enabling new trading strategies. And so, of course, short selling, that doubles kind of the trading opportunities there. Arbitrage, so sophisticated traders, will want to exploit minor price differences between the perpetual contract and the spot price, or between different exchanges even. And so that will add significant volume. So those are the keys that at least that come to my mind.
And Andrea, I'm curious about the balancing act. How can exchanges balance the risk and reward with these high leverage instruments?
Well, I think the reward is significant, right? Because you can see now, like I feel like it's safe to say more than like 70% of trading volume or revenue on like major exchange is coming from perpetuals and futures or derivatives. So the reward is without any need to say is significant. But they also comes with some risks. We can think of that for sure. So I understand that major exchange we usually have like really dedicated teams like tightly control the parameters from like which pairs we are listing because we don't want those like really weird coins and then just like kind of disappear overnight. And to like leverage limit, like why do we set this leverage limit to these pairs and why not this leverage? So this is all very sophisticated. So how like the margin is calculated, how the account is running. So it's all very it's a huge effort we are running. We have a really big team doing that. And on top of that, also we have like robust monitoring system to monitor all like liquidity. Are there any like bad traders like doing not malicious activities, that kind of thing. So I'll say that the upside is really huge, and with the right control tools, we can say that the risk is still manageable.
Yeah, and I guess I would add that from Bybit's perspective, they're running and managing the risk is obviously an enormous undertaking. From the perspective of a potential AlphaPoint operator taking on perpetuals, we're trying to balance the risk and reward also in the sense that by relying on a proven exchange like Bybit, we believe in the ongoing viability of Bybit's platform. So by plugging into it, the exchange itself, the AlphaPoint exchange, will reduce their own risk by putting that really onto someone else, and instead they can focus on bringing the customers to the table. And building your own perpetuals platform is an enormous undertaking. So you need the margin system, the liquidation engine, the insurance fund, the auto deleveraging mechanism. There's all these big pieces, and in addition, you need teams of people, potentially quant traders, risk specialists, and so forth. And so there's a lot of cost and risk to doing that on your own. So we're really happy to be able to offer our version of this, which offsets that risk onto Andrea. So thank you.
Yeah. Well, the revenue opportunities are clearly compelling, but with high leverage comes significant responsibility. So maybe let's shift gears and talk about the operational reality. Andrea, how can exchanges ensure fairness and transparency in funding rate mechanics?
Yeah, I think funding rate is one of the very key element for Perpetual. Um, so let's talk about the purpose of the funding raise. So the funding raise only exists for only one reason, that is to ensure the perpetual prices are close to the underlying. So in case that someone here doesn't know how it works, so it kind of like incentivize the short position holders when the price is kind of higher than it should be, and reward the long position holders when the price is kind of low. About the fairness, so the formulas and intervals is quite different from exchange to another, but it's very natural, right? Because the trading behavior, the trading condition is very different from each exchange. So I think that as long as the mechanism keep adjusting to anchor the price to underlying, it's fair. It's fair enough. Um, in terms of transparency, you can see that most of the exchange that display the current funding rate quite clearly everywhere on the trading panel. So you can see the information loud and clear. And also we published all the details about how we calculate the funding rate, the whole formula and breakdown of the formula, and what is a cap and a floor and an interval, and also all the historical data. They're all super public. So they're all super transparent and fair.
Matt, is there anything you'd like to add?
No, not really. I think that covers it.
Okay. Maybe switching gears just ever so slightly, either Matt or Andrea, what regulatory frameworks are emerging and how should exchanges prepare?
Yeah. I mean, I can start here. So, the first, there's a lot of trends that are happening in the regulatory environment. One of the, key ones is that there's a shift from ambiguity to defined frameworks. And so the global regulators in the past really were just watching the crypto world, but now they're implementing very specific and comprehensive rules. I guess the best example is MiCA, which is Europe's markets in crypto assets regulation, and that establishes clear guidelines for licensing and consumer protection, market abuse, and there's similar movements in Singapore, Hong Kong, and the UK. And so the regulatory gray zone is going away. And so it means that all parties who are playing here really need to adopt a compliance first mindset. We really can't wait for the regulations to arrive, and really it's a good idea to adapt the operations to something like look at MiCA and really try to be in compliance. Even if you're not governed by MiCA, this is really what's coming across the world. So that's kind of the first one. There is a focus on protecting retail traders from high leverage products, which is what we're talking about here. And so leverage trading is not available everywhere. So you really have to be aware of where it's allowed, when it's allowed, and act accordingly. I could go on, but maybe Andrew, I don't know if you have other things to add here.
Yeah. From my point of view, I've got to be honest, like the whole regulation thing is really taking a lot of our energy. We spend a lot of time talking with the local regulators, and also we have regulation consultants like from EY and all the firms all over the world to make sure that we are super compliant all in every place. Yeah, and we modify our products tailored to each local site to fulfill the regulation. So it's a huge effort, but we are doing all the efforts, so you guys can be easy and free. Yeah.
Yeah, it's a big
It's
deal.
almost, yeah, and it's a double-edged sword, right? The regulations come, which means that's where the volume comes from, but with the regulations come, right, potentially changes in requirements or kind of everything in between. So
Yeah, it's
thank you
constantly,
both.
yeah, it's constantly changing and it's constantly moving. You want to stay ahead of the curve, but it takes a lot of energy and yeah, a lot of cost.
Yes.
Yeah.
A lot of
Well, we've
manpower. Yeah.
yes, yes. Well, we've talked about the business case and managing the risks, but let's get under the hood. What does it take from a technology standpoint to support perpetual futures trading? I imagine it isn't just flipping a switch. Matt, maybe let's start with the technical foundation. When an
Sure.
exchange comes to AlphaPoint wanting to add perpetuals, what's the infrastructure shopping list?
Yeah, well, so let's start with all the pieces that need. So really, there's two ways to approach this, right? One is, so you're an exchange, you want to offer perpetual futures. You could build your own, and if you build your own, you're going to need to build a high frequency matching engine, a real time risk and margin calculation engine, a liquidation engine, a robust index price aggregator. You're going to have to run an insurance fund, and then you're going to have a team of highly specialized, developers, risk management experts, and so forth. And so that's certainly one way to do it. But with our current offering, we have, by providing the broker model, AlphaPoint and Bybit do all the heavy lifting. So Bybit has gone, they've built, this time tested, the matching engine, the risk management, all of that is already in place. And then AlphaPoint provides the turnkey integration. And so that's really our expertise at AlphaPoint, which is creating a seamless connection between the existing exchange and this powerful infrastructure provided by Bybit. And so, I would say those are the main considerations from my perspective. I'm sure from Andrea's perspective, it's quite different because, again,
Mm.
the heavy lifting is on the source exchange.
Anything you want to add, Andrea?
Well, I will be going on for a really long time. I would just say it's really complicated for from the matching engine monitoring system to also the all the like pricing and how to ensure liquidity and also the user interface, all kind of thing that we need to work on to just to support this instrument. Yeah.
Maybe the next one is probably a big concern for operators, which is how can exchanges launch perpetuals without disrupting their existing spot trading operations? Any lessons learned from your experience that other exchanges should know about?
I mean that this one is for Matt.
Either one.
Well, how to do it without disrupting operations. I mean, I think that in the case of using a broker model like what we have at AlphaPoint, it's actually quite easy because you can add on this capability, and it's something that now the users were previously had these other capabilities, and they create their dedicated perpetual futures account. They can transfer the funds in, and it's just this extra thing that they can do. So I would say that using the broker model, it's actually there would be very little disruption to operations. I think that if you're going to go and build your own, that's because it's such a monumental undertaking. That's obviously going to take a lot of effort. I think that's really the bottom line there.
Yep, I agree. Well, the great insights on the implementation. Maybe let's look ahead. So we've covered perpetuals as they exist today, but I'm curious about what's next. Andrea and Matt, what derivative innovations are you both most excited about over the next few years?
You want to start, Andrea, or I'm happy to go, whatever you want.
Yeah, I'll leave our partnership part with for you. I will just go on with the overall situation for derivatives, not just to any specific exchange and company. So I think that we'll see new instruments like the index-based perpetuals and perpetual for the trading for traditional assets such as like stocks and bonds. We can already see the RWA coming, so that is something can be imagined. And overall, over time, I think that the line between traditional finance and crypto will be blurred, and these would just be like all like financial instruments. So we can give people more choices, flexibility, and probably like greater economic freedom. Yeah.
Yeah. Another one I would say is decentralized and hybrid. derivatives. So right now, central exchanges dominate, certainly we see, but I do think that there's going to be a rise in decentralized derivatives protocols that run on chain. And so I think we'll be seeing a lot more of the hybrid model, which combines like the deep liquidity and performance of centralized platforms with more of a like self-custody and a DeFi angle to that. And so I do think that we're going to see a lot more of that in the future. And I'd also say AI is going to be integrated. I don't know exactly how, but we know AI is here, and we might be looking at dynamic margin systems that are AI driven. They could adjust leverage based on real-time market volatility, individual trader behavior. So that could create, more granular risk controls and, probably better capital efficiency for the end users. So I think that's definitely coming.
Well, this has been a fantastic discussion covering everything from business case to technical implementation to the future innovations. I'd love to open this up to our audience. Please feel free to post any questions in the chat for our amazing panelists, Andrea and Matt, about perpetual futures. Looks like we do have one. Can risk be internalized on AlphaPoint, or do all traders go to Bybit? And can we use our own liquidity providers?
So the answer is all traders go. So, okay, there's some nuance here. So for the turnkey integration that we provide now, we have integrated with Bybit. And if you, as an AlphaPoint customer, want to use the Bybit solution, then the answer is you're really reselling Bybit's markets. Now, it is possible to integrate to a different liquidity provider. So it doesn't have to be Bybit. We don't have an exclusive agreement with Bybit. Currently, we offer the Bybit integration. We are talking to some customers already about potentially, for whatever reason, they can't go with Bybit and they need someone else. So that's a conversation we're very happy to have. Right now, on day one, we have a turnkey integration with Bybit.
Thank you, Matt. We have another one. Can you talk about some structured products that can be offered, like options, dual currency deposits, etc.?
Andrea, can you take this one?
I'm not sure to what extent you want to understand. Like you want to understand the is it gonna be on AlphaPoint or like the product itself?
I'm taking it as more of a generic question. I mean, I can say on AlphaPoint's side, we don't have any current plans to provide. Certainly, we want to in the future, but we do not have concrete plans in our roadmap to offer those kind of structured products. But I know that Bybit, for instance, has very robust options and so forth. So that's something we're interested in providing in the future, certainly.
Yeah, Bybit does definitely offer a wide range of options, and I feel pretty confident to say that we have really good liquidity. We have really good market makers, and the trading volume is really good. We have major coins like Bitcoin, Ethereum, and you can see that a lot of other coins are coming probably next month. Yeah.
Thank you. Maybe a couple others. On the user experience side, Andrea and Matt, how does fee structure actually work for end users, and can exchanges customize those trading fees to fit their specific business models?
Sure. I can take this one. So, Apex, so the way it works is as follows. Apex operators will enter into a bilateral agreement with Bybit and join Bybit's broker program. And so really the conversation is between the operator and Bybit, but what will happen is they can work together to determine the trading fee paradigm. And so fundamentally, the traders that are coming from Apex will be charged Bybit's typical trading fees plus an optional fee add-on that is passed directly to the operator. None of that will be taken by Bybit. So if you want to add an extra basis point, let's say, that can be for all trades that the Apex exchange brings to the table, then that will be passed directly back to the operator. In addition to the percentage, there's a volume-driven percentage of fees that will already come as part of the broker program itself. So that's really how the fees work there.
Here's a technical one that comes up frequently. How does the system handle user balances and cross managing? Can traders collateralize their future positions with assets held in their spot wallets, or is it an isolated margin system?
Right. Well, so the Apex futures system, it relies exclusively on a cross margin paradigm, and so and a cross margin paradigm means that all of the collateral that is held in the futures account will be used as margin for all open positions. And so the traders will create a separate futures account within Apex, and behind the scenes, there is a separate dedicated sub account that is created at Bybit. And so when the trader transfers their funds from the and when I say Apex, by the way, that is the AlphaPoint exchange. That is our core white label exchange product. So when the trader transfers funds from their Apex spot account into the futures account behind the scenes, the funds are moved into the Bybit sub account, and that creates full collateral segregation. So there's no possibility, for instance, of losing assets that are in other accounts. It's only limited to the dedicated futures account.
Thank you. And then on the operator side, what level of customization is available for the trading interface? Can we tailor the look and the feel, and can we choose which trading pairs from Bybit to offer to our users?
Okay, this is another one for me. Okay, so AlphaPoint offers a reference web and mobile trading interface, right? So if you do business with AlphaPoint, we will give access to our reference trading front ends. And so Apex customers can choose to either use those interfaces directly, or you can look at the source code and build your own, using the same API calls and so forth. And so if you use the AlphaPoint version itself, that can be tailored to the preferred look and feel for the Apex operator. As I said, you could also build your own interface. And I think you asked about trading pairs. So yes, you can choose the exact trading pairs. You don't have to offer everything. You'll have the superset of everything that Bybit offers and say, I want this one, that one, that one. So there's full customization there. And you can also determine which assets you want to support as collateral, as long as those assets are also supported by Bybit. So that's all fully customized.
Thank you, Matt. For Andrea, can you talk about if and how you hedge your derivative trading positions on cryptos? This is from our audience.
Okay, let me just check the. Um, so usually we don't like hedge from traditional finance asset with crypto, but now we can do more of that because like for example, on Bybit we also provide like tokenized stock. So it is possible like you trade like Apple on one like traditional finance exchange and then also hedging use like tokenized stock on the other centralized exchange. The other way of hedging is like if you already have like a spot trading venue, traders can trade on spot and also trade on the perpetual at the same time to do hedging. So it's different underlying and different ways of doing that. I'm not sure it's something you want to then yeah.
Thank you. And we have two more questions. I think you alluded a little bit to this, I believe, Matt, but are there any accommodations from having the broker model in the present to eventually moving to a solution where liquidity is aggregated from multiple sources, providing clients more choice?
Yes, the answer is we are definitely looking into building a full stack solution that will be able to ultimately combine liquidity from multiple sources. It would require liquidity mirroring, which is a way to look at different exchanges, provide the quotes into it from those exchanges, present them in a unified order book. The end users can then it looks like like a regular fully functioning perpetual futures platform, but behind the scenes, when a trade occurs, we go back out using this liquidity mirroring tool and mirror the trades at an external venue. And so it would be a way to provide extra liquidity blended across different sources. It does require very robust risk management because there are going to be differences between the contracts at the different liquidity providers. So the topmost concern would be managing that risk accordingly. It's something we're actively looking at right now. So yes.
And thank you for that. I think this is a piggyback question from the audience. What margining models and liquidation algorithms are considered best practice for perpetual futures to prevent the cascading liquidations while protecting solvent traders?
That's an Andrea question for sure.
Wow, that's a really deep question because it's really complicated, and it's very sad to tell you there's no best practice because we're constantly modifying everything. But usually, what we do is like we calculate because you put in some kind of collateral, right, and to use a leverage. So the basic idea is that you cannot lose all your collateral. That's the whole margin system calculation is based on. Once you lose all your collateral, you have to be liquidated. So usually the whole system and the whole calculation is based on that. And also to prevent like a series of liquidation, it's highly correlated to the liquidity that the exchange can provide. If the exchange has no liquidity, then one liquidation can easily lead to another one. So basically, there are the two combination. One is that if your formula works, your margin calculation works, and the second one is based on the liquidity.
Thank you. It's definitely a tricky one. Last one, and then I think maybe we wrap up. How should an exchange calibrate funding rates, fixed versus floating versus hybrid, to avoid distortions while keeping perpetual prices aligned with spot?
Yeah, I'll probably take this one too.
Yeah.
Um, there's no there's no existing exchange that using fixed funding rate. The whole funding rate mechanism came from BMax, so usually people just kind of like using that kind of mechanism, similar mechanism, but we do like hybrid a floating funding rate, but we usually have like a cap and a floor. For example, in these 8 hours, the funding rate cannot go over 0.375%. That was the standard BMax set. But usually, based on each exchange, we set the cap and floor differently. And it's pretty similar to the last question. There's no best or there's no answer that works for like 100 years. We are we're just like constantly adjusting to like recent market condition and in the traders we have now. Yeah.
Thank you both. What an incredible discussion. Thank you, Matt and Andrew, for sharing such valuable insights on perpetual futures from the business case to implementation, answering all of our questions. For those of you that are ready to explore adding perpetual futures to your exchange, I encourage you to continue these conversations. Matt and I and the AlphaPoint team are here to help you understand what derivatives integration could look like for your platform, whether you're just starting to explore or you're ready to move forward. If you're interested in learning more about AlphaPoint's derivatives trading or want to see a demo of how this could work for Exchange, please don't hesitate to reach out to any of us or on our team. Again, Matt, Andrea, thank you so much for your time and your expertise today. And to everyone else, thank you for joining us. Any questions that came in at last minute, we'll go ahead and answer those if we can and send them out. Otherwise, we look forward to seeing you implement these insights in your own operations. And thank you, everybody. Have a great rest of your day.
Thank you.
Thank you.